Retiring and beyond, 5.1, to debt or not to debt. So you have a shortened time horizon when you start looking ahead of you and see less years yet to come than looking behind you and seeing how many are back there. Wow. All right. What an interesting position. Kind of changes your perspective because the rest of your life you've always been looking ahead, and now there's not a lot ahead to look at. And more you find yourself looking over the shoulder, saying, wow, that's been quite the journey. So you should have a shortened time horizon. If you're retiring early, you may have half your life yet ahead of you. If you're retiring late, you may have a decade or two. Doesn't really matter which way it is, so long as you are being realistic about your time horizon and recognizing that you probably have less to come than what you've already been through. And that gives you wisdom and perspective. Please, though, be aware that it tends to change during your retirement process. Now, retiring from something is never a great idea. You want to retire to something, and you want to be mindful about debt in retirement because you're not going to have an income anymore. Or if you're working in retirement, it's probably going to be a smaller income. So be careful what debt you carry with you into retirement. Also, we want to be very careful how we structure it because people are not as willing to loan money to retirees as they are fully employed people. Isn't that interesting? They want you to have an income before they give you money. So when you think about what matters most, we're looking for priority lists. We're looking for clarity of vision. And this freedom time of your life, what do you want to be free to do? And debt is always a chain because you owe money to somebody, somewhere, not only for the principal, but for the interest. And interest rates change and they can be sudden. So we want to make sure that we have a really good understanding and be very clear on our intent of any debt that we're carrying into retirement. Now, sometimes it doesn't look the way we want it to, and you're carrying more debt than you'd like. Take the opportunity before you actually retire to structure it so it's flexible, so it suits you, so that you've locked in possibly at a rate that you can afford for the time horizon that you're expecting to have that paid off for, so that it is perhaps a bit more certain. A lot of moving pieces in retirement sometimes. And flexibility equals freedom. So if you lock it in, please do make sure that you're able to prepay a little quicker in case that's something that becomes available to you. Please, in retirement, don't take out expensive car loans. That's pretty reckless. Number one, the interest rates right now for car loans aren't that great. Number two, it's a depreciating asset, means it's not going to be worth as much as you paid for it. And number three, to be taking your retirement income to support something you couldn't afford to pay with cash says that you're probably not spending less than you earn and living within your means, which always mortgages your future, and you don't have a whole lot of future left to mortgage. So just don't do it. If you're going to have debt in retirement, please make sure that it's something that's serving your freedom, that's helping your freedom, not robbing your freedom. I think that's everything for debt and retirement right now. I think that when we get to retirement, debt-free, even if it's well-structured debt-free, feels better. Helps you live a little, a little looser, a little lighter. And again, isn't that the time of life where you'd like to be a little lighter, a little looser, be able to take advantage of some of those opportunities that maybe you couldn't have earlier in life? And don't you know yourself well enough by now to know what you really need?